Hey, Kath.
Hi.
So we're going to talk about market cycles. I know, like, you're really well known for, predicting and understanding real estate cycles. So where do you think we are in the market cycle?
That is the multi-million-dollar
Yeah,
question,
I
isn't
know.
it? It's so important to understand, in my opinion, a couple of things that I don't think you learn in economics these days. That supply and demand, of course, is always important, but what's affecting supply and demand? And it seems like these days, much of that is out of our control. It has so much to do with what the government wants to do and whether the government is stimulating the economy or not. And that, as we know, has so much to do with rates, and if the Federal Reserve is going to raise rates or lower rates. Most people have no idea what that even means, but it's in the news a lot these days.
It is. Yeah, I know. Well, let's talk about rates because, it's funny, like, as you know, we both are pretty heavily in real estate. And so honestly, most of the discussion I have with my partner is, where do we think interest rates are going and what should we do? Because if you lock something now and it goes down, you're like, oh, or sometimes when you lock it and it goes up, you're like, yeah, I was right. But just recently, they said they were going to lower them, right? Yeah. So why do you think it's a good time to buy, based on that?
Well, again, it's so interesting because predicting a market cycle is so much harder today because it's not, again, what you learned in school. It's very manipulated, extremely manipulated, and that is the Federal Reserve rates. Now, President Trump would really like to get reelected. So what the Fed had been doing and did last year, they raised rates 4 times, and that slowed down the economy on Trump's dime. He doesn't want that. So he's been pressuring the Fed to lower rates. And that's normally not something the president is supposed to do. They're supposed to be independent of each other, but we're talking about President Trump, who does things differently and wants a booming economy.
And he's a real estate guy.
And he's a real estate guy. So really, it's in our favor, if you look at it that way, that we have a real estate guy who's invested in things going well and wants to get reelected. So even though all the headlines are saying this is the longest expansion, be careful, there's a recession around the corner, there's always one every 10 years, that's not the way to predict things.
Correct.
10 years, there must be a recession coming. No, there's other things you need to look at, and that is really what the Fed is doing. Now, it looks like they're going to at least hold or lower rates, which stimulates the economy, and that should happen for at least another year. So I think there's going to be an expansion, more of what we've been experiencing. So good time to buy.
I would agree with you. So what's interesting though is, like, we've had this 10-year run. Yeah. Maybe not quite 10, but close to 10. So prices are inflated, right? Interest rates are a huge component of that. And it's interesting. As you know, I just exited on a bunch of stuff. I'm also holding a bunch of stuff. And we're conflicted personally on like how much further is this going to go? And so why, with inflated prices and lower interest rates, you think it's a good time to buy?
I as soon as I said that, I thought I want to qualify that statement because we are very aggressive in certain things. I think there's a lot of people, and I know you agree, that are making huge mistakes. Yeah. They're paying way too much. People who are new to investing and buying multifamily, get low cap rates, thinking that rents will only continue to rise and that the economy will only continue to expand forever. That is not the case. What I believe is it will expand for at least another year. So what does that mean? For us, one of the things a niche that we got into 10 years ago because we had a developer come to us in 2010 or 2009 in the last downturn, and there was nothing but land. It was cheap and no one wanted it because builders got absolutely wiped out because of leverage. Yeah. They were over leveraged in the boom, and then the crash came and they lost everything, many of them. And so we started syndicating because this developer came and said, hey, can you raise money? Can we do this and start acquiring some of this land for really cheap? And we did. We got 4,200 lots in Tampa for 10 cents on the dollar. Incredible opportunity. But it's a different world today. People are paying too much for land. Right. So the way that we now, we did great on the acquisition then, very different today. So the way that we're protecting our investors with the idea that the next year may be really solid, but what comes after that? What if somebody else gets into office who has a different idea about business? And and the economy. So you've got to almost have one foot on the gas and one foot on the brake and be prepared for either way.
Correct.
So for us, when we're acquiring land now, we will improve the value of that land by entitling it or bringing in horizontal construction or improvements, and then we'll sell half the lot so that we own the remaining lot
free and clear, right?
Then we're, whatever happens, if it expands, good. If there's a recession, we're fine.
I think that's a really interesting point and a good point, and that only comes with experience, right?
Age.
Right. Well, what I mean by that is like you have to almost experience being over levered.
Yes.
And having cash calls and having to because I've been there, where we've funded projects during downturns, and you almost have to go, okay, I don't want to do that again, or personal guarantees, which is another one, and that's what kills people. That's what I'm seeing now is that, people are getting these loans with personal guarantees, and basically what that means is they're pledging all their assets against this loan. In the hopes that it'll all work out. And when it doesn't work out, then those people lose not only that, but all the rest of their assets. And, that's the time to jump in. But, and so what you've done and what I did with that resort I bought in Sedona, for example, was I have no debt. None. And so you have time on your side. And when your investors have been paid back through lot improvements or value adds or whatever, for us it's a value add. You buy something, you improve it, grow the rents, put another loan on it, and pay them back. You're not as much worried about the actual value of that remaining asset. You know what I mean?
Absolutely.
Yeah.
I mean, that's where people are really going to get into big trouble. And I hate to say it, it's where you and I are going to come in and pick up some great deals.
I know.
In about 5 years.
Right.
Or 3, who knows? But because over leverage will absolutely kill you. It was hard on, Rich and I got hit so hard in 2009 because of that. So my mentors, the people I work with and partner with, have experienced, have been through that. They're very conservative. We are raising enough money to acquire the land and build out the first phase with no debt.
Correct.
Which no one else is doing. And the deals that come onto our desk are like leverage to the hilt. Like if this thing doesn't work with no leverage, don't even bring it to us.
It's interesting, right? Even with the stuff, I was telling the story, we were on the boat yesterday, this beautiful Lake Coeur d'Alene here. And, there was a deal that we sold in Houston that I was the seller. And then we went into escrow with non-refundable money. And so we're like, okay, great. This is awesome. Locked in. I actually got the business plan through a syndicator on my own deal, which was awesome, right?
Wow.
It was the greatest thing ever. So I'm the seller. I'm in escrow with this buyer, and the buyer solicits me to be an investor in the new deal, right? Which is our deal.
Gosh.
So what was cool is I was able to see the business plan. Okay, what are they saying about this project, which we already own, and we've already tried to grow the rents, we've already tried all this stuff, and it's the same thing. It was, the management sucks, which is us, right? It's like the rents are $200 below market, and we're going to put $10,000 a unit into and I'm like, well, we'd already tried all those things. So the point is that when you said they come across your desk, people can put whatever they want on anything and make it look like anything, right? In this particular case, we sold it, and I hope it works out for them. But it was really interesting seeing the spin. Everybody's putting a spin on something else, on somebody else's, right? And we sold that at a 4.2 cap.
Wow.
So,
Yeah,
and honestly, I hope it all works out for them. I really, truly do. But they have amazing hurdles to get over, right? And so people are still investing, people are still raising money, and they're still buying on a marketing spin of the future of being better than it is now. And I think being in a position where you don't have the debt dragging on you, or you just have cash flow. That's actually for us what made us survive the last downturn is, we were at say 8, 9, 10% cash on cash. And then when the downturn hit us, we were at 4 and 5. You know?
Yeah.
You know what I mean? We didn't have as much cash flow, but we were still covering our debt. We were still covering all our expenses. We didn't have a lot of discretionary cash, and we were returning less to our investors. But what happens is these guys, they get way over their skis, you know, and they say next year's going to be better than the last, and so it's, you know, really, really smart the way you're doing that.
Thank you. I mean, when 10 years ago, well, no, more, I guess 2005, 2006, I was so lucky to have Robert Kiyosaki on The Real Wealth Show.
Yeah.
And that was one of the benefits of having a podcast, that I could have someone like him. I think it was there weren't podcasts yet, so I think it was just a radio show. But he was then that he explained to me the importance also of understanding market dynamics.
Yes.
And I was a lender at the time, so I knew how bad loans were. I knew what was going on. I knew it was going to blow up, but I didn't know what to do about it. And it was Robert Kiyosaki who said, you got to sell everything in California. It's a bubble market. Nothing makes sense. The numbers don't work. People are taking negative cash flow and thinking that's okay.
Yep.
And so he's like, sell California. But Texas, you know, here we're talking about the same market.
Yeah.
But different.
Yeah.
I mean, the same market cycle, but
Right.
different market dynamics. So he said, sell everything in California and buy in Texas, where that boom hasn't happened yet. So I listened to him. Rich and I went and sold California property, bought a bunch of stuff in Texas. I talked about it on the show. The next thing you know, we've got people saying, I want to do that.
Yep.
Who are your connections? That's kind of how our model got started, is, you know, we find these teams and then we refer people to them. So in that situation, even though the market cycle hit the country and there was a recession, there wasn't in Dallas.
I know.
Right?
We were there. I have an
Yeah.
office there.
Yeah.
I agree.
So we were able to help people. I had this lady sell 3 properties in Stockton, California, $420,000 each. They were bringing in about $1,200 in rent. Somebody thought that was a good idea and bought it from her. And we were able to get her 9 brand new homes in Rockwall, Texas, a beautiful part of Texas, for $120,000 to $140,000 for brand new homes. She quadrupled her cash flow. Since then, her equity has tripled.
Yeah.
So she never felt a recession. The guy who
Yep.
bought her Stockton properties, those $420,000 properties were worth $75,000 in
Yep.
about 18 months.
Yep.
So just understanding where are the jobs going, where are the people going, and what areas will sustain any kind of recession, because one is coming eventually, right? Eventually.
Right.
Not this year probably, and maybe not next year, but I think we all know that there are some bubbles out there that will probably...
Right. Well, you bring up a really good point. Like when you read something on the news or the paper or watch something and somebody says, you know, we're at 96% occupancy, for example. Mm-hmm. That doesn't mean that Stockton or Detroit or Dallas, Texas is 96%.
Yeah.
You know, and I think, you know, we're talking about these market dynamics are so very, very different. Because I bought a company in Texas in the early 2000s, a 9,000 unit apartment company. And, you know, at what I felt was going to be a boom in Texas, you know, and luckily, hindsight's 2020, luckily, you know, it worked.
Yeah.
But it could not work, right? Somebody could make that same decision in San Francisco, Stockton, wherever.
Yeah. And they are.
Yeah, and they are. So,
Yeah.
You know, how can somebody tell where they are in a market cycle?
It really, I mean, cash flow is one thing. Like, cash flow is going to help, but also if you're in a market like that's shrinking. So even if you have good cash flow today, but jobs are leaving and people are leaving, there's, you know, you're probably going to see rents go down.
Yeah.
So you've got to understand where people are going and why. And when you have today 10,000 people, it's a very different world today than 10 years ago. You can't really compare now to really any other cycle, because we're about to see the next 10 years will be different than anything we've ever experienced due to technological advances, advances in medical. You won't even maybe need to ever go to a hospital, because you'll have your little robot at home monitoring everything and giving you what you need. I know that sounds crazy, but it's not. It's not.
100% true. And
so,
transportation too, with Uber. We were talking about this.
Yeah, just did a story on my real estate news show that Uber is coming out with their flying taxis in 3 years. I mean, this is not going to be the same world. And if you don't see it coming, it's too bad. You've got to see change. Well, we're going to see change like we've never experienced. But what we do know is there's 10,000 people turning 65 every day.
Right.
They want to retire. They want to enjoy their golden years. They're going to do that in no state income tax states like Florida and Texas and Washington. They're going to go to areas where they can comfortably live, where it's affordable.
Yeah.
So John Burns Real Estate Consulting says that over the next 10 years, the majority of demographic growth is going to be to the southeast.
Yep.
And the fastest growing corridor between Tampa and Orlando. And that's good to know, right?
Yep.
Like, where are people going?
And it's true.
And it's
it
true.
will happen.
Yeah.
Yeah, I mean, it's funny. It's just math.
Yeah.
Honestly, like, you know, it's funny how that works. But, you know, these folks up in the Northeast go to the Southeast.
Yeah.
That is how it will happen.
Yeah, if you're 65 and thinking, you know, I've got a little tiny nest egg, where am I going to go that this nest egg isn't going to break? You know, it's going to.
That's right.
Got to be and somewhere comfortable and lovely like Florida. Why not? So
100% agree. So what are some of the different phases in a market cycle when you talk about it?
Well, the most important thing I think to understand is that the best time to buy is when when people don't know about it yet. That's my favorite.
Right.
So I look for markets that I just flew into Spokane and to come here to Coeur d'Alene, and the Uber driver told me about the new Tesla, I guess, factory that's coming in here, and I started to do some research. I mean, these are kind of things, it just came out in May.
I know.
Some of the things, I think Google's built, or Amazon, whatever, there's things happening in Spokane. That's not on the map.
Right.
But that's the type of thing I want to know. Where are the jobs going? Where are employers saying, this is an area that's business friendly, I'm going to move my business there, it's affordable. Well, guess what? Everything around that is going to grow. So like Reno, we started looking at Reno because we knew Tesla was going there. We knew Amazon, Google, they're building, you know, some of the autonomous cars. They're building, it's the future.
Right.
It's not stuff that's going to be gone next year.
That's right.
So we started looking for land before people knew what was happening, and we got a great deal, and we're building homes, and they're flying off the table there in Reno. And so again, Spokane might be something we're looking at. And,
yeah,
right?
100%. No,
yeah.
I did that with Austin. I did that with Austin, Texas, you know, and same kind of thing.
Yeah.
You got to look, as Gretzky says, you know, where the puck's going, right? Yeah. They would ask, you know, well, why were you so successful? He's like, well, some people follow the puck. I try to go to anticipate where it's going. And if people can understand that, you know, through these market cycles, through these employment shifts, and the cool part about it is, if you look at these economic development offices or the government's office, or, you know, these are all announcements.
Yeah.
These are like way out there. Like, you know what I mean? Like Tesla, Amazon, I mean, we already know where Amazon's headquarters, how political the whole process was. We already know where they're going to be built.
Yeah, exactly.
There will be major real estate change, you know. I mean,
all of the cities that Amazon made on their top 20 list, those are places to look at, right?
Right. Exactly right.
It's not that hard to figure out, but that's, for me, it's not even so much about a global market cycle. It's more like, what cycle is this particular market in?
Correct, right.
Because like I said, we had one of the worst, it's almost a depression, but one of the worst recessions in 2009, and yet Texas did great.
It did. It did
great. So I want to pay attention always to what the Fed is doing, what the president's doing, and what kind of its tax incentives are there, like opportunity zones. You know, there's going to be money going into those areas. But at the end of the day, it just comes down to, where are the jobs going, where are the people going, and can you get cash flow there? And
That's
can you get affordable prices?
Cash flow to me is one of the bigger things. I always start with that, and people always go, "How do you invest?" And if I never invest in something going up in value, ever. Yeah. I just never have. I'm always like, for me, it's all cash flow. Can I cover my investor in return? Yeah. If I can cover my investor return in what would be a really poor cycle, then I'm good. You know what I mean? Everything else is gravy.
And unfortunately, so many people don't understand the importance of, or I should say, the responsibility of taking someone else's hard-earned retirement and investing it. I have been in difficult situations, and I look these investors in the eyes, and I know that this is everything. Like they're handing over,
trusting you.
They're trusting you, and so I meet people all the time now who've maybe been in real estate for 2 years, and they've been raising millions of dollars. And first of all, how did that investor decide this is the person I want to put my money with?
I know.
I mean, the first thing you should look for when investing in someone else's deal is the experience of the operator.
100%. Yeah, I completely agree.
But anyway, yeah, so that cash flow. Now, I have, we do some deals that don't have cash flow, right? Because we acquire land.
Oh, yeah.
But we try to still make that very safe, like I said.
Well, yours is a value add play, though.
Yeah.
Yours is buying land, putting in all the infrastructure, and then selling off that piece. That's actually fine.
Yeah.
That's a story. You know what I mean? The only thing that could happen there is, you know what I mean? No buyer, right?
Right.
But even then, you have land with an infrastructure.
Especially if we don't have debt. We
Correct.
can hold it as long as we want,
right.
Or just sell off portions. We have a project in Costa Rica that we have it was like, ooh, we're going to buy 800 acres in Costa Rica. This is different. How can I make sure we're safe? And we had so many exits to make that safe. I mean, just a few exits would be just sell off a little bit of the land and be there free and clear. We planted 10,000 fruit trees, and now we have an export business.
Yep.
And there's just a whole bunch of ways. There was enough wood on the property that we now have a furniture business there as well.
Yeah.
And then we built, in the process of building the homes, which takes a little bit longer, we decided to put in a tent community. So we have this really high-end glamping tent community, so we're already making an income renting those out with a New York City chef that takes all the food we grew and makes these gourmet meals. So it's like making sure that you have lots of options.
That's the point, right? That's the point. If you're riding one horse toward toward a higher market, you got to have multiple options, right? In my opinion.
Yeah. Absolutely.
Well, congratulations for your success so far. You have incredible reputation with a lot of high the investors that invest with you. I know think very highly of your company and everything you've done for them.
Thank you.
Yeah.
I think it's truly an honor.
Nice job.
Thank you.